Okay, let's unpack this. A pretty major directive has just come down from former President Donald Trump, a move that could really fundamentally reshape the digital assets landscape. Our mission in this deep dive is to get a real handle on these new executive guidelines for federal agencies, what they actually signal for the U.S. crypto ecosystem, and, yeah, why it matters to you.
Yeah, it's fascinating, isn't it? What really strikes me is the distinct shift in tone. For years, we've just seen such mixed signals coming out of Washington on crypto. This directive, it seems to aim for a much-needed, unified direction. It's trying to say, okay, this is how the U.S. will engage with crypto and blockchain. A strategic pivot, really.
A strategic pivot, exactly. And it's not just the overall tone, right? This directive actually drills down into some specific, potentially impactful changes. So for starters, there's a big push for regulatory clarity. Agencies like the SEC, CFTC, the Treasury, they're basically being told, get on the same page, deliver unified guidance. And the goal, it seems, is to finally end that constant confusion around whether tokens are commodities or securities.
Which is just fundamental. I mean, think about how many projects have stalled or even moved offshore simply because they couldn't get a straight answer on that.
Exactly. It's been a real logjam. This aims to unstick that. Then there's also this strong encouragement for banking integration.
Ah, okay.
Yeah, the guidance is basically urging banks to offer services to crypto firms, making the things like account access using stable coins for payments and digital asset custody much easier without that constant worry about regulatory crackdowns.
Right, removing that fear factor, that's significant.
And it also proposes some actual tax relief measures, like potentially raising the threshold for reporting crypto transactions and simplifying how capital gains are calculated. For everyday users, that could really smooth out trading and investing.
And, it's not just about making things easier, is it? It feels like it's signaling broader acceptance. It even recognizes the tech itself. The directive explicitly praises blockchain's potential for innovation, transparency, economic empowerment, which sort of hints that future policies might lean more towards decentralized solutions.
Okay, so if we connect those dots, what does this push for clarity actually mean for the bigger picture? For market adoption, maybe? The U.S.'s position globally?
Well, potentially, quite a lot. With this kind of, let's call it institutional blessing, crypto markets could see a substantial surge. Think about it. Businesses that were maybe hesitant before, they might now launch new services, list more tokens. And the big players, banks, pension funds, they might feel much more comfortable adding crypto exposure.
So we're talking potentially unlocking serious capital.
It could be. Trillions in investment and innovation that's sort of been sitting on the sidelines, and globally. This could definitely strengthen the U.S.'s position, especially when you look at countries like, say, El Salvador or the UAE, which have already made pretty aggressive moves.
Right. But it's rarely straightforward, is it? Even with a directive like this, what challenges are still lurking?
Oh, absolutely. That's a key question. While the directive sets a tone, you still have the SEC holding considerable power, especially in defining what's a security. So those old, often contentious debates over token classifications, they could definitely resurface.
So same old arguments, potentially.
Could be. Plus, you've got the ongoing anti-money laundering and counter-terrorist financing concerns, AML-CTF. Those are critical, right?
Yeah.
Preventing illicit finance requires robust solutions. And then there's the tricky bit of aligning this federal guidance with existing state rules. Places like Wyoming or Texas have their own frameworks.
Yeah, that state versus federal thing can get messy.
And of course, you can expect potential political pushback, lawmakers worried about consumer protection or maybe financial stability overall.
Okay, so given all that context, the potential and the pitfalls, what does this really mean for what's next? For you, the listener, what can we realistically expect to see?
Well, definitely keep an eye on market prices. You might see significant shifts. Often altcoins rally first on this kind of renewed optimism. We'll likely see some notable institutional moves, maybe big names, JP Morgan, Wells Fargo, announcing new crypto services. Wouldn't surprise me.
Interesting. And Congress.
Yeah, watch Congress. They might start introducing more crypto-friendly bills in response. And the industry itself. Exchanges, startups, they'll adjust. Probably accelerate token listings, fast-track compliance tools to fit into this new, hopefully clearer landscape.
So ultimately, it really comes back to that core idea. Crypto thrives on clarity. This directive, it holds the potential to unlock just immense investment and innovation.
Absolutely. But, and it's a big but, the real test is the follow-through. How effectively are the details actually implemented by all the different agencies and stakeholders? The devil's always in the details, isn't it?
Indeed it is. Implementation is key. Still, this decision could mark a really new chapter for crypto in the US, one where, maybe, regulatory certainty finally meets rapid growth. So as you think about all this, here's something to consider. What does truly unified federal guidance actually mean for the future of decentralized finance? And how might it reshape the very idea of traditional investment as we know it,